Good evening, everyone, and welcome to the Brian Crombie Radio Hour on Saga 960. So I think topic number one in almost every household around the Greater Toronto Area, if not Canada, if not, frankly, a lot of the Western world today, given increased interest rates and high housing prices, is what's happening with housing prices. And I read a really well-written newsletter by a realtor in Toronto, Anil Ramlal, and I wanted to invite him on to talk a little bit about what he thinks about the real estate market, because I think this Thanksgiving Day weekend, we're probably all going to be sitting around tables, and undoubtedly this topic is going to come up because it's going to be maybe this one, inflation, and what about the Blue Jays are probably going to be the topics that we, or maybe a little bit about Ukraine. This is going to be the topics that we talk about around the dinner table. So Anil Ramlal, thanks so much for joining us. He's an out-of-box thinking realtor who gets the job done. He's going to talk tonight about the real estate market, the challenges for consumers getting into the market, and a little bit about what realtors are facing. Now, Anil, you've got a little bit of an interesting background. You played soccer professionally abroad. Is that correct?
That is correct. Yeah. So I actually played all through high school. Played for many high competitive level teams. And I in grade 12,
position?
I'm actually a center mid.
Center mid. Fantastic. Yeah. And did you like it?
Yeah, so I love it. I love it. Yeah, when I was 17, I got offered actually a few trials in Brazil. So yeah, a few professional teams. I went and played out there. Amazing experience.
Well, I wish I could see you play, but at least we get to hear your performance from a real estate standpoint. So tell me, what's going on in the market today?
Yeah, I mean, the market, it's kind of interesting. It depends who you're asking, right? I mean, if you're looking to buy or sell, it's a challenging time, but there's many things. I mean, in general, we're seeing a lot of demand is down. Bidding wars they're a thing of the past, right? You're not really seeing those too much. We've seen the trend shift quite rapidly, actually, from early 2022 to now with all those interest rate hikes. So it's been a real change in the market for sure.
Properties. I spoke to one condo developer, and they said they haven't sold any condos since June. That because of the interest rate increases, demand has just dried up.
Yeah, condos, their average time on the market is more than 40 days in certain areas. And it's honestly, it could be a little bit longer because a lot of people, they take their properties off, and when they relist it, then it sells in 40 days. So it could be actually a lot longer than that 40 days, right?
So what caused this shift in the market? Is it just the increase in interest rates?
That's the main factor, to be honest. I mean, purchasing power, it instantly got hit. Right. So we've seen the demand, it went down a lot, and that's what caused the major prices to go down because there's not as many buyers. But I would say, the interest rate is the main thing.
Lots of people, lots of economists, lots of magazines, lots of people thought that we were in a real estate bubble and the prices were too high. And it was psychological that people kept buying because they thought prices were going to go up forever, even though we may have had very high prices relative to this personal disposable income or rents or things like that. Do you think any of it was just that people came to the realization that the prices were too high, or no, it was just affordability that was the issue?
Affordability is the main issue. I mean, judging from what I was seeing personally, I had clients in February, right before the interest rates really took effect. They were saying, yeah, the market's going to go up forever. We need to buy now. We need to buy now. And I mean, I didn't see it that way where people were saying it's just completely unaffordable. We were seeing more offers than ever. I mean, I was in competition with, I bought a property for one of my clients, February 16th. We were in competition with 23 offers. So
23 offers.
23 offers. It was
where have all those people gone?
That's the thing, right? The rental market's gone up drastically. So it's possible a lot of them are renting now, right? It's possible a few of them, they ended up smartening up and possibly buying when it got a little bit.
Well, if you think that the market could go down by 10, 20, whatever percent, that's the smart move, is to not bother buying, just rent for a while.
Yeah, that is true. The rental market, they're up more than 30% in certain areas. So It's hyper competitive too there right now.
So what's happening with prices? I hear that prices are down from some people, and other people prices aren't down. They're coming down. The days on the market is lengthening, and volume is down, and so therefore prices will come down in the future, but they haven't yet come down. Tell me about the actual stats.
So the prices, if you're comparing it from like January and February when it was at its peak, it's definitely down, like 20-30% in certain areas.
20 to 30% prices down
in certain areas. Yeah. We've seen properties that went for as high as 1.5. They're selling for 1 million, right? Like
what areas? What areas are hardest hit?
Areas that got hit really hard, I would say Cambridge, Kitchener, Waterloo, they got hit. Oshawa, surprisingly, not that much. Oshawa and the Durham region, not so much. I would say, yeah, Kitchener, Cambridge, those got hit pretty bad. Hamilton got hit really bad as well. The prices. Mississauga, some properties, it's funny, they still hold like pretty good value, but Mississauga even's gone down quite a bit, 10-15% in certain areas.
Really? And so what do you think is going to happen? Is it going to go down another 10-15%, or have we found the bottom?
I honestly think, the way the market is and what's going on with interest rates, if they have a few more interest hikes, which they're predicted to, I think it's going to continue in the same trend, which we've seen from we've had 5 interest hikes this year already. So all 5, we've seen it slowly take its effect on.
So we could go down another 10-15% is what you're saying?
It's possible, yeah.
And are sellers adjusting, or are they very reluctant to adjust?
Sellers, a lot of them are still in that belief that they can get those prices they were seeing earlier this year. So a lot of them, you're seeing a lot of people that are testing the market, which means they're just putting it on the market and trying to get those prices, which is why you're seeing so many days on the market and those stats did get skewed by people like that. But if you're in a position where you have to sell, properties, you're still getting really good value if you're comparing it to, let's say, 2021, in the beginning of 2021. People are so used to just comparing it to what's earlier this year. But if you're comparing it from last year and 2020, then you're still getting a really good bang for your buck for your properties. We're
chatting with Anil, is it Ramlal?
Ramlal, correct, Brian.
Ramlal, and you're with EXP?
EXP, that's correct.
And what areas do you specialize in, Anil?
So I like to stay in Mississauga. I do actually quite a bit of work in the East End as well, Toronto and Scarborough, and I do a bit of Durham as well. But I like to stay, relatively Peel and Toronto areas.
And if people want to get the very well-written newsletter that I received or contact you, how do they best do that?
They can do that with my either my social media, my Facebook pages. I'm sure we're gonna get those as well out there. And then feel free to message me anytime. We can get you guys onto those newsletters as well and get you that great info.
Anil Ramlal, thank you very much. We're going to take a break for some messages and be back more with Anil in just 2 minutes. And I'm going to ask him about, residential suburban real estate versus downtown real estate versus recreational real estate, luxury versus low end, what the impact of amortization periods are. Stay with us, everybody. This is going to be a good conversation. Welcome back, everyone, to the Brian Crombie Radio Hour on Saga 960. We're chatting tonight about the real estate market. It's one of the topics that's undoubtedly going to come up over your Thanksgiving Day dinners. It's something that is important to everybody because it's our number one most important asset for a lot of people, and one that if we have appreciation, which people this past year haven't enjoyed, but if we have appreciation in your principal residence, you get tax-free. And so therefore it's an important asset, and it's a very important asset from an after-tax standpoint. And I got a really well-written, well-researched newsletter from Anil Ramlal just last week. And so I thought I'd invite him on the show to talk through what's going on. So Anil, we've talked a little bit about pricing. You're saying it's down more in Brantford, Hamilton, London, Kitchener, etc. You say it's down not as much in Mississauga. So is it that farther from Toronto, it's down more?
I wouldn't, it's tough to say that because I mean, we've seen areas like Oshawa and Whitby. I actually had a buyer, we put in an offer of maybe about 3 or 4 weeks ago on a place there in Oshawa. And we've seen, yeah, we were actually in competition still. It was pretty crazy. We're not really used to seeing too much competition still. We were competing against 3 other offers.
Really?
So it's, I think it's dependent on most likely the properties in those areas, but we're seeing properties even outside of Toronto and the East End. They're still going pretty well with
Now,
prices.
what sort of the academic answer is that that when you've got a market decline, it is resort properties and luxury properties that take the biggest hit. What are you finding? Is cottage country, is Collingwood, is Muskoka's down? And what about sort of high end couple $1 million properties? What's happening with them?
Yeah, so cottages, you're right in saying that. We've seen cottage properties drop a lot. Demand for those is definitely down. I mean, we're past summer as well, so the buying peak is down for those as well. People don't really focus on those too much in the fall and the winter seasons. They're more focused for the spring and summer seasons in buying those. So the demand for those is down. We've seen prices in those go down drastically as well.
Yep.
Yeah, the luxury market, honestly, for the people that are buying, let's say above $2.5 to $3 million, those properties, they didn't get as hit as hard as properties that are everyday properties.
Why?
My honest thinking for that is just if you're in that price range and you're looking for properties of that price, they're holding their value.
But they're going to be just as impacted by affordability and mortgage costs. Why don't they get hit?
I think the main thing is it's there's a lot less people that are buying those prices. So
they didn't get the run up that other houses got.
The other thing too, I mean, a lot of them, their finances, they're in a much better position as well versus everyday people. A lot of people, they're not even getting that 20%, right?
Yeah.
Down. So they have to get mortgage insurance and there's other things that they have to get when you don't have that down payment. So it's a lot tougher for everyday people in that price range.
What's the difference between a list price and a sales price?
Okay, so the list price, the way I like to think of the list price is that's the price you're advertising your place at, right? That's not necessarily the price you're going to sell for. The sale price is obviously what it sells for. That's what we use for comparables. When you want to find out, let's say the value on 123 Main Street, you use 122 Main Street, what it sold for. So that's the way you get comparables and that's the way we assess property values. The list price is the price that you're advertising your place for. Again, that's very important because the average sale price to list price ratio right now in Mississauga is about 96%, meaning if you list your property for $1 million, it's selling for 96% of that value, so 960,000. So it is an important factor in selling a property.
So I got a bunch of people that a year ago told me that people were putting their list price low so they'd attract a whole bunch of offers and create a bidding war. Is that still happening?
So that was the case prior to the shift. People were definitely listing their properties below market values. We've seen it with a few properties in today's market. It doesn't work as efficiently because the demand is less, right? So the bidding war strategy is not working as well. There's a few people that are still pricing their properties low to try and sell it, but it's not as efficient in this market. The way I like to price properties in this market, I like to follow the trends. So if the sale price to list price ratio is about 95 to 96%, you want to price your properties at a price where it's going to sell.
Now, a year ago, when the market was booming, people were, not having financing conditions and not having inspection conditions. What's happened with that today?
You can put those conditions in. Buyers, rest assured, like you can put those conditions in. You guys have a lot more flexibility, even with closing dates. Prior to this, you weren't even getting the closing dates you want. Everything the seller had basically all the power to tell you when it's going to close and no conditions. But in today's market, buyers are getting a lot more flexibility. You can put those conditions in. Financing's pretty much standard now because obviously the way with the interest rates and inspections, you can put those in as well. You can ask for the closings you want. It's a lot more flexible for buyers.
Um, amortization periods. I had one person on that told me that the secret to not having a housing crisis is that the government, the banks, should extend amortization periods so people have a longer time to pay their mortgages. Do you think that might help things?
It could. I mean, it's a possibility. I mean, the main factor is honestly, I would say don't buy out of your budget. That's my main thing with like uh that issue. I would say, yeah, don't buy out of your budget. Try to stay within it. Don't try to stretch it too much. I mean, amortization periods, it could affect it for sure. I would talk to a mortgage person more on that.
Right. Okay. What advice do you have for people right now if they're looking to buy? Should they be buying? Should they be looking, or should they just wait a couple months?
It honestly depends on your situation. I mean, if you, let's say you have a kid on the way and you need to get into a new property, you need to buy, right? If you're looking just to invest, find some good properties. There are many in this market. It honestly depends on your situation and what you need to do. If you're just in a situation where you can wait, I would honestly, it's possible you may get lucky and wait a bit to find a better property, but even still, with interest rates continuing to go up, like you're not really saving too much on your monthly payments, right?
What about for guys like you, real estate agents? What are you doing? Are you all losing a lot of money and not making nearly as much money, or you got some time to do a better job?
For real estate agents like myself now, you have to find ways to differentiate yourself from the crowd if you want to stick out from everyday agents. So you got to find new strategies and ways where you can continue to grow, innovate, and improve. The newsletters, I mean, marketing, those are all major keys in today's market, right? For real estate agents. Prospecting is a big one, getting out there, cold calling, door knocking. The old ways of real estate still work, and I'm a big believer in that. I built my business off cold calling and door knocking.
Really? Cold
Yeah.
calling and door knocking.
Yeah.
What's a recent challenge that you faced? Can you give me a personal story?
Yeah. Recent challenge I faced. So this is also pretty common in today's market. So I had a client, they were looking for a property in Whitby. They had some challenges with that. So we ended up, sorry, not Whitby, Grimsby. So we ended up having to sell theirs. They were looking for a retirement place down in Dunnville. So they wanted to sell their Grimsby place and buy out in Dunnville. So we sold, but it was sold conditionally. It was sold conditionally on that the buyers that purchased theirs, they're able to sell their place. So we gave it to them because that was our first offer in 35 days on the market. So we didn't really have too much to go off of. So we took that offer. It fell through. The people that bought our place, they weren't able to sell their place. We had to go back and start the whole process again. This is almost 60 days later because we gave them 3 weeks to try and sell theirs.
Yep.
So this is more than 60 days later. We had to put it back onto the market. I got out there. I started calling back all the agents that had came the first time. We went full blast. I did a serious push on social media to really try and sell it. We ended up selling it 2 days before the interest hike in July, the 1% interest hike. So I told them, guys, we got a good offer here. We need to take this. It was a firm offer too, actually, no conditions. So I told them, guys, we need to take this. You're in a much better position if you take this offer. We sold that one. Maybe about a week or so later, bought them their property in Dunnville. So they ended up being happy, but that whole process, took 5 to 6 months almost.
What was the price differential between the deal that fell through and the deal that got done?
Yeah, that's a good question, actually. So when we sold it the first time, we sold it conditionally. We sold it conditionally for 835,000. The 60 days later, we ended up taking a firm offer. Like I said, we took that offer at 750,000. So
85,000
yeah.
on an 800 or so $1,000 deal. So a 10% decline. And what was it listed for?
Yeah. So I had that listed for 799.
And a year ago, what would have gone for? $1 million?
Let's say before the like shift, I would say, yeah, you can get $1 million for that. You would get $1 million for that.
So down almost a quarter, almost
Yeah.
25%.
Almost 25%. The good thing for those people, I know it seems like, holy, they lost 85,000 on the sale price. They also bought for a property we got it basically 70,000 under ask. So 15,000 difference, not as bad.
So I guess that's one of the answers, is that if you're selling today and buying today, then just like, the pitch a year ago was, if you're buying and selling at the high or buying and selling at the low, it doesn't really matter because you're trading one for the other. It's a visceral, emotional problem if you're buying too high or you're selling too low. It's interesting because when you think about markets, the whole idea is to buy low and sell high. But it seems like a year ago, when things were really high, we had a whole bunch of people buying based on emotion and fear that it was going to keep going up. And this year, when prices are lower, we got no one buying out of fear that prices are going to go down even more. And so it's almost like we're doing the opposite of what basic economics tells us we should do. We were buying when things were high and on fire, and we're not buying when prices are low.
Yeah, fear has definitely played a big factor in this market. I mean, watching the news all the time, it does add to that fear as well. If you're looking to buy into the market right now, it honestly, if you have the finances put aside, I would say do it, because if interest rates keep going up, it's going to get harder and harder. Your purchasing power does go down. So if you are in a position where you think you can purchase, I would say get a real estate agent, talk to a mortgage broker, get that process started, because purchasing power, it's going to continue to go down the higher interest rates get. So, yeah.
Anil Ramlal, thank you so much for joining us and tell us a little bit about the market. I really appreciate it. Again, if people want to contact you, what's the best way? Follow you on social media and send you a message?
Yeah. Anil Ramlal Real Estate on my Facebook, and then Anil_Ramlal for my Instagram.
Really appreciate you joining us. We're going to take a break for some messages and come back in 2 minutes with a different real estate agent. And we'll see if they've got a different opinion on what's happening in the market today. Stay with us, everybody. Thanks, Emil. Really appreciate it.
Thank you, Brian.